Friday was a very pivotal moment for the markets as we fell below this wedge I have right here. I've been posting this one on the Twitter account lately, and this yellow line below here was the support, and the top for this resistance was this other yellow line right here, and we actually broke below it for the first time since this started all the way back on May 20th. So as you can see here, we've used this as a support along with mini supports in between all along until we fell under and retested it on Friday, and now we have stayed under. So this brings a very interesting dynamic to this upcoming week. So because we are below this line, there's two scenarios that probably will play out tomorrow. The first one is we actually have a very large gap down in the market. This one's a little bit less likely. However, because we are below this level, it does bring a lot more danger towards the downside. That's just how the market dynamics work. The market is subject to a lot more weakness while we're under this level. So a gap down just has a little bit more likelihood of occurring. Now, the second occurrence we could see happen is we actually gap up a little bit and we land right on this line of the wedge, and we opened up right on it. This tends to be the case as we've seen previously. Market makers want to make the day, or at least the trend of the day, unknown, so they will typically gap it in the direction where it lands right on a key pivot line. And I've seen this so many times happen, especially recently. So they gap it right on the line, so you don't know, and you can't have a bias in either direction until we start to see confirmation from the candles occur. So this would be the second occurrence I could see happening during the day. But otherwise, either way, the big thing was we actually had a pretty big turn day occur the other day, and this was on June 2nd here. So you can see this very big green candle occurred right here. And what's interesting is, as you can see with my two other orange like circles that I have right here, we had very, very similar outcomes after a candle just like this one that we're seeing right here. So this right here was a very, very bullish daily candle. However, the next day we gapped down quite a bit and ended the day red, which is a very pivotal form of a reversal in the market that we've seen happen the last two times. So over here on May 4th, we had the FOMC meeting, and we had a big rally off of that, and then the next day gapped down and then fell down very hard after that. This is a very, very bearish setup because we had such a bullish candle. Like, this is fully green all the way up, very, very bullish candle. And then the following day we gapped down and had an even more bearish candle because it erased all the gains literally from the day prior, which is very bearish, and we continued down after that. Same exact thing over here on May 17th. We had a very green and bullish day. Typically, a candle like this would mean we have continued upside afterwards, especially during the bull market of like 2020, 2021, and it was above this upward channel. However, I was short at this moment because I expected it to be a fake out very similar to this one over here. And as you can see, the next day, very, very red afterwards, and we fell for about 3 more days because we landed all the way down here to make new lows. So we have a very similar setup yet again. We had a very green day, about as green as you can get with this bullish engulfing candle, and then the following day, we had a gap down and ended the day red. Now, the next day was not as extreme as this one on May 18th and this one on May 5th. However, we still had the gap down and ended red, and also over here, like I shared with you earlier, we fell below the yellow line, so a lot of bearish emphasis on this right now. Again, could the bulls continue to go up after? Yes, as always, the market's about probability, as I will always share in every video. I play price action intraday. My bias tends to be right the majority of the time. However, no one's ever perfect by any means, so I have to have stops in place and have good risk reward, because at the end of the day, that's how you become a very good trader. So if we were to go up above, back into the wedge and have confirmation, whether that be on a 15-minute candle, better yet, a 1-hour candle, then I would switch to the long side with my risk being a 15-minute close below this yellow line that I have right here, and it would probably continue up to go higher and then retest the top of this level. However, as of now, like I shared with you, my bias is bearish, at least for Monday. At the very least, we'll probably see another red day. I'm assuming we'll see at least 2 more red days based on how this has gone in the past. We had a lot of red days following. We had 3 red days over here. And I think we had another similar, day all the way back up here. We had a big, so you could call it a breakout. Over here, we had a green candle, very bullish green candle, but then the following day we gapped down a little bit and then fell for 3 more days afterwards, or at least we made the low on the 3rd day. So it seems that after you have a big breakout or so, seemingly a breakout, and you have a big gap down the following day with a red candle, there at least is going to be 3 days, or at least on the 3rd day, it will make the lower end of the spectrum. Could it continue to fall down like it did here? By all means, yes. But 3 days is a pretty sure bet, or at least 3 red days in a row. It's a pretty sure bet that you could find after a big fake out like you see on this candle here. Now, along with that, I want to look at the flow as well as the dark pools, because there's actually something very interesting. I'll show you with the dark pools here first. We had a lot of activity, as you can see on the right of my screen here, on Friday after hours. And Friday after hours, I like to have a lot more emphasis in terms of weight on where the market can go the following week, because a lot of people get off their computers early on Friday. They want to enjoy their weekend, as everyone should. But the big players like to sneak orders on Friday because they know people are leaving early for the weekend and they want to enjoy themselves. So they will tend to sneak big orders that will have an impact the following week early on. And I've noticed this. So we had a $749 million Microsoft print along with multiple other ones that equated to over 1 billion in premium, and I posted this on the Cheddar Flow Twitter account with a little clip on how I plan to play that. So if you do want to check that out, you can check our Twitter account. But then also we saw other tech names like NVIDIA and AMD have very large prints respectively to their size and their ticker. A $500 million premium print for NVIDIA is about the same as I'd say like a $900 million print for Apple. So this is very, very large and it has a lot of emphasis behind it. And what's interesting, if you look at these charts, if I go to AMD here, we had a big green candle out here, which would signify a breakout. However, the next day we gapped down. And after that, we retested the top of this wedge I have right here. You can see the bottom of the wedge and the top of the wedge. We retested it and failed to get back over it. This is a bearish setup, and it's bearish in the making for a potential reversal to retest the lows here. So this, obviously, this candle looks very bullish, but as of now, it has yet to get back over it, and until it does, the emphasis is going to be a bearish trend until we retest the bottom here again. So bulls want to get this back above with a daily candle close in order to continue that higher. Another thing I want to share, and this is all about the market dynamics. Remember, all of these I'm sharing with you, Microsoft, AMD, NVIDIA, Apple, all of these are big players in the market. So by sharing these setups, especially if they have a bias to the bearish side, that will weigh on the S&P 500 and the NASDAQ. Apple right here, we had another retest of this big wedge that I had, or the big channel I had prior. The support's down here, resistance was up here. We fell back below, as I've shared in previous videos, in early May during that corrective phase, or a little bit more excessive selling in the markets. And then we retested it again, fell, and we retested it yet again this past week, and we're not able to reclaim the channel that we had, and we're not able to get back above it. This is a very bearish setup. Again, anything can happen. We could continue higher and go up above, but as of now, bias is overwhelmingly bearish on Apple. About the only thing that I could see saving this is a potential inverse head and shoulders. As you can see here, we have the right shoulder potential that could be forming in the future, probably this week. We had the left shoulder over here, and then we would have the bottom over here. And this would be the only thing that could save this and potentially rip it back up. If we fall below and have a daily close below this low that we had here, about like 138.50, that's very bearish, and we're going to see this thing fall a lot more, which will weigh heavily on the market because Apple is the largest holding in the market. Same exact thing here with Tesla. Tesla, we had a retest of the previous wedge that we were trading within. You can see the top here, and the bottom was a key support and demand level. We fell below this recently, beginning of May, same exact thing as the other tickers. We had a low around this time, middle of May or end of May. And now it looks like we're going to form that inverse head and shoulders, which if you remember, this is a bullish setup. So we have to be careful. We have to make sure our risk reward is calculated, because this thing could fall down to like 675 and then rip straight upwards and just catch everybody off guard. So we do have to be careful, and again, always have risk reward. But as of now, it looks like there is a little bit more downside till we get to these points on these tickers. So I just want to caution you guys that there is a little bit more bearish emphasis as of now, but it's not the end all be all. It's not like we're going to crash right off a cliff. We have to be careful and make sure you watch all of these big tickers like I'm sharing with you in this video, because all of them are weighing, like I said, on the general market, and they're all going to have an impact. So one last thing I want to share with you here is the S&P 500. We actually saw some very large orders hit the tape, especially Friday. If I filter for over 1 million, which is what I like to do to see where big money is putting themselves, no pun intended, We can see here that the 715 expiration is still getting hit pretty hard. We saw 393 strikes. So this is very far out of the money considering they bought this at 411, the spot price of SPY, and they got this for 13.7 million in premium. So that is a lot of premium. This is a very, very unusual order. Not only that, it was also above the ask, so that shows urgency, and they really wanted to get into this position on Friday. Same thing can be applied for these other orders as well that are highlighted. We have a 400 strike. This is for 617, so that's a very, very close expiration. You have to be careful of those because they're expecting to move very soon. Same exact thing with these ones up here. 390 strike, 410 strike, so a lot of bearish emphasis in the flow. So that's been continuous as we've kind of rallied from lows here. We've seen a lot of bearish emphasis in the flow. So that also leads towards my bias on the downside, at least within like this week or next week. But again, market is dynamic. We have to play with the cards we're dealt. And as of now, if we do have a little bit more downside, we still are probably going to retest this level right here. There is a very large support around this range, roughly 3,950 to 4,000. That's a very strong demand zone that if the bears wanted to win, they'd have to crack below this decisively. Otherwise, it could just bounce off of here, continue its chop upwards. So other than that, appreciate you guys watching this video. Hopefully it was helpful, and I will see you guys in the next video later this week.